Hello guys, so we all know, I know, you know, your friends know that tomorrow is a very important day for the US dollar. We have the CPI, the Consumer Price Index, and it's set to bring a lot of volatility into the market. Today I will be dicing this thing, this CPI here, as everyone likes to call this thing that moves the market, this data, that CPI, a little bit more so you can understand how and in what way can possibly move the market. But before, give us a thumbs up on this video, subscribe to the channel and stay with me until the end, because in the end I will give my honest opinion about what do I think, CPI coming up or CPI coming down. Alright, let's go into it, because I do believe you've liked this video already and you've subscribed to the channel, but I will give it some more minutes. Feels like some people haven't yet subscribed to the channel, which is, you know, I sort of can feel it, because the majority of people that watch our channel are not subscribed, so unfortunately that's very sad. Okay, let's go. I think everyone has subscribed already. So guys, we have it, you know, this is Australia time, just making sure everyone again understand. We have the CPI at 11:30 p.m. in Australia, month over month and year over year. So we have the CPI month over month for the month of September, the core CPI month over month, and the CPI, normal CPI year over year. The big difference between the normal CPI and the core CPI, I think I've discussed that already, but it's pretty much this. It takes off, the core CPI takes off the food and energy prices, because this is the most volatile items on the economy. Food prices can be varying on one month to another. Energy prices can vary to one time to another as well, to one month to another month. So the central bank is the, you know, I wouldn't say it's the preferable measure of the central bank, but it is what the central bank pays most attention between normal CPI, including food and energy prices, and core CPI, excluding food and energy prices. Core CPI is what the central bank pays more attention, because this is something that if you exclude food and energy prices, they can control sort of the economy on the interest rates, on the monetary policy, on their tools to control the inflation, right? Now, we're going to have the CPI month over month expected to be 0.1% from the previous of 0.2%. So there is an expectation of coming lower 0.1% for the month over month, okay? Now, the core CPI month over month is expected to drop as well 0.1% from the previous of 0.3%. So we are in line with the normal CPI, including energy and food prices. So there is an expectation of coming 0.1% lower than the previous for the core CPI, and there is an expectation to come 0.1 lower than the normal CPI from the previous of the normal CPI. Now, the year over year, it's very important as well, and it is expected to come down to 2.3% from the previous of 2.5%. It is very interesting, this data point, because we are looking at the consensus much lower than the previous for three of them. So the normal CPI month over month, the core CPI month over month, and the CPI year over year. So this is showing to me that yes, the Fed is capable to maintain a stronger labor market while reducing the inflation, because they continue to hold the interest rates at a higher pace. Well, they've done a cut, 50 basis points cut. They expected now to do a 25 basis points cut. But this is exactly the point I want to touch base. Now, will this strengthen the US dollar, or will this weakening the US dollar, weakens the US dollar? There is only two options here, right? The first option is that the CPI comes in higher than expected, all of the three, and this strengthens the US dollar, or the CPI comes lower than expected, all of the three, and this will weaken the US dollar. My play would be weakening the US dollar. Now, for the certain reason that the Fed, the FOMC, was sort of, the market was specifying a 50 basis points cut for the next month, meeting in the 7th of November. That is 2 days after the election. The election happens on the 5th of November, and the FOMC meeting rate decision will happen on the 7th of November. So 2 days after the elections. Very convenient. So the Fed was expected to cut 50 basis points. But then the NFP showed a very strong labor market, showing that the Fed is capable of controlling these, but still on a very high pace. 250,000, the expected was 140,000. So there is pretty much 100%, pretty much the double of what was expected, as the previous was revised down from 170,000 to 190,000. So pretty much the NFP have been all up, okay? Now, with the 50 basis points now decreased to 25 basis points, this continues to show strengthening on the US dollar. If these targets, if these releases of the CPI come in higher than expected, we may have a probability, a small chance, of this 25 basis points cut be a pause. Okay, but I still believe on a 25 basis points cut in the next month, and another 25 in the month of December to finish 100 basis points cut this year. 50 last month, and now the 25 next month, and 25 in December. Now, this, if they do, yes, consequently it will weaken the US dollar, but don't forget that right now the context is safe haven is the US dollar. So the war is happening. The missiles are getting into one country to another. Geopolitical tensions continue to happen, and we have the politics tensions as well on the USA against Kamala Harris and Donald Trump. So my honest opinion is a long on US dollar, just because we still have a lot of geopolitical tensions, and US dollar is serving as a safe haven at this moment. Now, if you like this video, please guys, subscribe to the channel, give a thumbs up, and share this content with your friends. Don't forget that tomorrow we have the webinar from 5 to 6 p.m. and I'll be eagerly waiting for everyone so we can break down even deeper the CPI for the release a few hours after the webinar tomorrow. Thank you so much. Have a great day, and I'll see you tomorrow on the webinar, or see you in the next video. Bye bye.